headlines at 9 p.m. on the India development debate. The big GST reset is finally here. GST Council slashes effective tax rate on 178 items of daily use to 18%. 13 items have now been moved to the 12% slab, while 6 essential items will not attract any tax. After today's rejig, only 50 sin goods will remain in the highest slab of 28%.
The government does make a big move to rationalize the GST rates on restaurants. All eateries will now attract a uniform 5% GST. The council removes the input tax credit system for restaurants. Finance Minister Jaitley says the move was necessary as the hoteliers were making undue profits, refusing to pass on the benefits of input tax credits.
The GST Council refuses to give in to the demand of traders to do away with real-time invoice matching. Justifying the Council's decision, Finance Minister Jaitley says a continuation of the scheme is needed to ensure there is no revenue slippage.
The rate revision to hit the government hard. Announcing the GST Council's decision, Bihar Deputy Chief Minister Sushil Modi says revenue collections could fall by as much as 20,000 crore rupees. But the big question is, will the big giveaway on the fiscal front help revive demand?
Finance Minister Haseeb Drabu says the robust revenue collections over the past 3 months has emboldened the GST Council to slash rates. Also says there's nothing to worry for states due to the cut in rates, as they're insulated for the next 5 years, even as he raises a red flag over the hit on the central government's finances.
Good evening. This is the India Development Debate right here on ET Now. I'm Supriya Srinath in New Delhi, and joining me in Mumbai is my colleague and co-anchor Sandeep Gurumurthy. Let's take you straight across to the debate tonight then. The big GST reset is finally here. In a widely expected move, the empowered GST Council today pruned the list of items in the 28% tax slab, moving out 177 items to the 18% bracket. The big GST reset will make a host of daily use products like soaps and detergents to beauty products a little cheaper. After today's review, only 50 sin goods will remain in the highest tax bracket of 28%. In a big decision, the council rationalized GST on restaurants, bringing all non-5-star eateries, AC or non-AC, in the 5% slab. Announcing the council's decision, Finance Minister Jaitley said there will be no input tax credit for restaurants which have been profiteering by not passing on the benefits. Just to remind you, ET Now has been on top of the big development story, bringing you the updates live from Guwahati, which hosted today's GST Council meeting.
The big rejig in GST rates will leave a dent of about 20,000 crore rupees in the exchequer. Speaking to ET Now, J&K Finance Minister Haseeb Drabu said there won't be any impact on states which have been insulated for the next 5 years. Today's development is, of course, a welcome move coming against the backdrop of a fall in consumption. But at the same time, it also raises some interesting questions. First, will the reclassification help revive demand? Also, what about the timing? Has a review been done with an eye on the forthcoming state polls? We have an impressive list of guests and experts joining us on the India Development Debate to discuss all of this and more right here on ET Now. Joining us on the show this evening, Dr. Indira Rajaraman, noted and eminent economist. We've also got Nanalal Kidwai, chairperson of Max Financial Services, Pratik Jain, leader in tax at PwC, and a very special guest, Najib Shah, former chairman of CBEC, one of the key architects of the reform, joining us as well on India Development Debate. We've also got Praveen Khandelwal, Secretary General of the Confederation of All India Traders, joining us to represent the trading community. I'm going to start off with you, Mr. Najib Shah. 178 items have been moved from the 28% slab downwards. Do you think this reboot that has happened today has happened largely because of the political noise over GST and, of course, with an eye on the upcoming elections?
Well, it's an unfair question to ask me. All I can tell you is that from what I heard the Finance Minister mention, which is that there has been buoyancy, and this has prompted the reduction in the rates, but has been brought out by another one of the participants in the GST Council meeting. This is a huge hit which the centre is taking, the states themselves being insulated for a period of 5 years with compensation guaranteed by the centre. So I'm sure the maths has been done, but these are humongous decisions which have been taken today, and should also accompanied as it is by several other relaxations in the compliance, should help ease of doing business.
Okay, we didn't mean to ask an unfair question to you right in the beginning, but I think your column in the Times of India earlier today prompted us to ask you on the politics of the GST. So indulge us there. But Dr. Indira Rajaraman, does this signal that we are perhaps moving towards what was originally envisaged for the GST? The Chief Economic Advisor, Arvind Subramanian's report, which spoke about just 3 tax rates, which said only sin items should be in the 28% category. Are we slowly but surely converging towards the three slab regime, really? Because one of the criticisms of the GST has been that it's a very complicated, this multi-layered tax structure is what has undone the GST and the rationale that it was put in the first place.
Well, I don't know that I would call it a convergence necessarily. Or if it is, it has been done in a very untidy way. You have to remember that when you start off with a tax like this and have this kind of rate fluidity, one rate one day and then it comes down the next day, the whole system which is set up to factor in taxes at particular rates has to keep changing with respect to the dates. And when you consider that now taxes are being paid for the month of July, you can imagine the confusion within the IT system when different rates have to be factored in for different months. So this is a terrible way to do things. This is not the way to go towards convergence. I would much rather have had a single re-examination of the entire rate structure and then a set of rates introduced which would then remain stable for the next, at least for the next 12 months.
Nana Lalkitbhai, comment on that. How do you read the decisions taken by the government? Because many felt that to start with, that state governments especially were sort of obsessed with the revenue neutrality, and that was sort of a key fact, underpinning the entire GST architecture. This obsession with revenue neutrality. And today we heard a lot of the state finance minister as stirs, and one seems to get an indication that they've given up that obsession because they're seeing a fair amount of revenue bonds. At least the state governments have. They've given up this obsession with revenue neutrality. Is that a big breakthrough, according to you, and is that what has given the elbow room for the council to cut rates as drastically as they have in this meeting?
I think it is a huge step. It's a huge step because it's not really the government that determined this rather complex GST structure. It was a council made up across parties. And it's exactly as you say, we had state representation which was pushing, and the government had to come up with compromises at every stage to push GST through. And exactly as many of us were hoping that good sense would begin to prevail, in that we need a much more simplified regime. And the very complexity we introduced, and you take restaurants, non-AC, AC, there were restaurants which had part AC and non-AC. There was utter confusion in terms of what rates were to be charged for some of the very small service sector spaces which were looking to evolve. So I think the reality check has been, and it's not just the buoyancy in state revenues, it's also the huge noise that has been coming from the SME sector, from services sector, the sheer complexity and ability of people to file, or inability of people to comprehend and file the returns, and the handholding required therein, and the implementation. So the simplicity brings with it much better implementation and ease of implementation. The fact that the possibility of raising the limit at which it can be a comprehensive return without the input tax being raised, all of this suggests that people's needs and difficulties have also been heard, and the reality check of the theory of trying to maintain tax equivalence, which was where also the council had set things out. But on the other hand, simplicity of implementation was somewhat ignored. And that reality check has been heard, and I think, in time. So I think it is clearly not just about ease of doing business. It is fundamental to ensuring that some of our smaller businesses, both in the services sector and in the other sort of trade sectors, are able to comply with a new regime more readily.
Right. Ms. Kiz, I just saw your thoughts there, because I've got Prateek Jain also right here on ET Now. And Prateek, I know you believe that this is a big reset. You believe this is a big reboot. So I'm curious to know, Why do you believe this is a big reboot? Why do you believe this is this big reset? And do you believe this is going to reduce the compliance burden, the other big critique of the GST? And why do you believe? Give me 3-4 reasons why you believe compliance will go down.
Yes, so definitely, and I think there is never a wrong time to take the right decision, and I think more than the rate per se going down to 28 to 18, what it shows is that there is a shift from principle of equivalence or revenue neutrality to what is right for the economy and what is right for the consumers. So 178 items going down from 28 to 18 is not a small thing. I mean, there is a revenue implication, and this 20,000 crore, while it in overall context is maybe 2.5% of what you collect, in a year, but it's still very significant. And the fiscal stimulus, which was given several years back when there was a slowdown, you can compare this with perhaps that, and 10% reduction in a lot of these consumer products will certainly spur the demand and will give the boost to the economy. So I think it's also paves the way for a simpler tax structure, and I think somebody did talk about that. Today you have 0, 5, 12, 18, and 28, and hopefully as we progress, you will converge into 2 or 3 slabs, and this is what I think is a beginning to that. On the compliance front, obviously for the bigger businesses, which is more than 1.5 crore a year, they have continued with monthly filings of at least for the sales, but the purchase, the decision has been deferred to the group of ministers. It means that government wants the bigger businesses to still go for invoice matching. For the smaller businesses, perhaps not. And for smaller businesses, you have quarterly filings and all that. Also, very importantly, the distinction between offline and online sales has gone. So earlier, anybody selling on e-commerce platform was required to pay tax irrespective of the fact that the threshold was below 20 lakh. Now you're not required to do that. So for e-commerce, any supplier on e-commerce, this again provides a level playing field. So small things like that, I think is a huge day for the history of GST in India, and I think this will be a beginning for further simplification in the tax structure as well as the overall structure of GST. So I'm very happy with today's development. The only one point where I'm not too happy about is restaurants for 5% where you have restricted the input credit. I think that will complicate the matter a bit.
Okay, since you raised the issue of invoice matching, and I know that that's a sort of heated issue that, some of our panelists have very strong views on. Dr. Indira Rajaraman, for one, has written a lot of columns on the issue of invoice matching. Dr. Rajaraman, you've been critical of this particular clause, and that you believe that that has come in the way of the risk-sharing mechanism between the wholesaler and the retailer. And we heard the Revenue Secretary pretty emphatically stating that they are not looking at tweaking that. Firstly, explain to us, why do you think it's such a big deal? Because, many would argue that this is fundamentally at the core of the GST design, and this is what ensures that that there is no revenue slippage, and that the government, in fact, to quote Neelkant Mishra, the chief strategist of Credit Suisse, he said this is what will ensure that there's a stick that can help tax administrators project more power than they have. So don't you believe that doing away with invoice matching will be a huge concession?
No, I don't agree that invoice matching is the only kind of stick that you can have. You do need a stick when it comes to tax compliance, but that is not achieved through transaction by transaction matching of the kind that they are aiming for through invoice matching. You can have back office audits. You can ramp up the percentage to 20%. And if all taxpayers know that there is a 1 in 5 chance that they're going to be audited and penalized for misreporting their taxes, that's a big enough stick. Why do you need to match it invoice by invoice? Secondly, let us remember that in this very meeting in Guwahati, by saying that restaurants can't claim input tax credit, you're breaking the invoice matching right there. There are suppliers of foodstuffs and furnishings and so on to restaurants all over the country who will not be able to get their outward claims matched by any inward claims from the restaurants. What's going to happen there? You're breaking invoice matching there anyway. So I think it's time to break away from this kind of piecemeal reform, which is what we've been seeing not just in this meeting of the GST Council but in previous meetings, and emerge onto a stable platform where you do keep the stick of of tax auditing, but it doesn't have to be done with respect to every single invoice. That is a ridiculous type of matching to try for, and it will never be achieved because the GSTN simply cannot meet that kind of demand, that volume of hits on it. GSTN is already failing. It's been known to fail. It's reconsidering its inner mechanisms, and we have to. I have no doubt that invoice matching will go. It's just that it'll go in a very painful piecemeal fashion.
Okay. I think Dr. Indira Rajaraman makes a very passionate call for invoice matching to go, but I know somebody who has a diametrically opposite view, and that's Najib Shah. Mr. Shah, if I may come to you, can failure of GSTN or the fear of failure of GSTN be the reason to abort invoice matching? Because if you listen to the reason that, you know, your not so long back colleague Hasmukh Adhia gave, he said, we need a trail. We need to know, we cannot, and even, you know, I think Hasib Drabu spoke about this. They said, we need a trail. We cannot let the trail be broken because that is going to defy GST. My question is, A, how much do you disagree with Indira Rajaraman? And B, do you believe some of the concessions and the relaxations that are now coming into the GST are perhaps going to make the system a little less foolproof on invoice matching than it has been?
I must at the very outset say that I respectfully disagree with Dr. Rajaraman. She's, our experience really has been that evasion is the bane of all taxation systems. And in the erstwhile central excise CENVAT regime, we had any number of cases of credit being taken without the goods having been received, without the invoices having been received. And sectors are extremely vulnerable where there is direct B2C, where there is, it goes straight away into consumption. So invoice matching is something which was debated, discussed closely with the GSTN, whether they would be capable of handling these humongous number of invoices itself before it was put into place. Yes, it is going to be a challenge, and to suggest that audit can take care, I again respectfully disagree, because we simply don't have that sort of capacity to go around auditing the large number of assessees and taxpayer base. So I think invoice matching, if there, would be extremely useful. Invoices are the very key for me to take credit, and there's no reason why I should hesitate to have it matched with the supplier itself. Yes, every break in such requirement is a break in the credit flow, as it has been done for the restaurants with a flat rate of 5%. To that extent, it weakens the entire system. But I do hope GSTN can cope up with the requirement of invoice matching, because that, I think, will be the key for better compliance ultimately, and consequently increase in revenues.
Pratik, then come in on that, because this is a very critical debate, and I think one would argue that the Revenue Secretary today has made the government's position very clear. There was a lot of expectation that the government would give in on this particular clause as well, and there are a lot of traders and a lot of representatives of some sections of of the trading community who've been making a strong pitch for this, and an eminent economist like Dr. Indira Rajaraman, of course, as well. But in some sense, the government has cleared the air on invoice matching. Which way of the debate are you, and do you believe that leeway on invoice matching attacks the core of the GST structure, or do you believe that it's one of the reasons why we have seen a GST-induced slowdown in certain sections of the economy?
No, I think invoice matching must continue, at least for the bigger businesses. And as Mr. Najib Shah points out, the tax to GDP ratio in India has been very low, and because of the high degree of sort of evasion. And there were many states in India, even before GST, 8-9 states which had this invoice matching principle applied for VAT purposes. So it's not new in that sense. Perhaps what is not justified is that if the vendor has not complied with the law and he's not uploading the invoice, the purchaser doesn't get the credit. So perhaps that is a philosophical debate, that whether for somebody else's non-compliance can you penalize the purchaser. But invoice matching in that sense, and it has to be done by GSTN, and I think there are a lot of people who believe that GSTN, because there are initial technical glitches, it will not be done. It doesn't have to be done, it has to be done electronically. The system will do it for you. And other than invoice matching, I mean, I think it will it will go against the basic philosophy of GST, which is promotes electronic filing with lesser of physical interface, and just like income tax for that matter, that when you deduct a tax, unless you file do the filing, you don't get the input, the benefit of TDS which has been deducted. So it's for income tax purposes, it has been going on for some time and it has been quite successful. So I think invoice matching is important. Yes, the government has relaxed the compliances for initial few months, but once the system stabilizes, I think the system can work well.
Okay, I'm just going to take a breather away from invoice matching, and I promise we're going to come back and put the spotlight also on GSTN and the IT processes, because I think a lot of the debate that is happening on compliance and other issues does miss the point that it is the network that's perhaps letting us down right now. But Nainal Kidwai, a very frank question has to be that with all the tweaks that has been done today, do you believe some of this is going to address the concerns on the reduction in economic activity, the GST-induced slowdown, quote unquote, that gets talked about? Do you believe the tweaks, the changes, the reset that Prateek calls it, does that take care of, that slowdown that came on account of the GST?
So a large part of the slowdown was not so much about a GST after implementation. It was pre-GST implementation because of the destocking that took place. So you're seeing that through corporate results, and it certainly impacted the SME sectors as well. Thereafter, the confusion has been more about how to file, what to file. And yes, to the extent that rates were seen as high across a lot of consumer-related items, restaurants could be a classic case, where there were a lot of grumbling about rates and interpretations, etc. therein. The ease of actually applying the rate, and on paper it looks better at 5% against the many lines you would otherwise see, may again at least encourage the consumer out there to spend, because one of the ways we need to kickstart the economy back to its natural GDP growth is spending. And if people have if we moved a little bit away from tax equivalence to making the consumer a little happier, it should make the economy a lot happier too, because we do want that demand to begin to return into the system. And I think to some extent we cannot ignore what these changes have done now in terms of the consumable basket of the middle class and others. And I think therefore it is important. On implementation, a lot of the squeals of pain were, of course, everything would get, the first filings were horrendous because everybody sort of chose to do it on the last day. We saw that burden shifting. Fortunately, the dates kept getting extended, but the system was just overburdened by huge amounts of filings that were really left to the last day. Hopefully that is getting better streamlined by businesses who are learning to do things in time. And I think more time being given, the fact that, for every invoice, it's now more like 2 months for the filing. I think all this indicates that attention is being placed also on the ease of doing business and filing. And it's very, very important that we pay attention to particularly the SME sectors, because they've been the worst hit. First by demonetization and then by the GST implementation. And many who were just throwing their hands up saying, hey, we just can't cope at all and maybe we should just shut shop. Right. Those that worked with MNCs right. or with big businesses benefited because they had the hand-holding happening. Right. But those that didn't clearly had issues, and I do think that some of these changes are looking to address that as well.
Okay, let's hear it from someone who represents the traders lobby, at least. Praveen Khandelwal, the Confederation of All India Traders Association, joins us as well on the India development debate. Mr. Khandelwal, many would argue that much of these changes have been done to please the traders of this country. I mean, there's, there are elections in a month from now, and there's been an uproar caused by the trader community and how GST has sort of, completely crushed their business and their sort of compliance, mechanism, etc., etc. Do you believe that the steps taken today fundamentally address the concerns of trader communities, or do you still have some more complaints?
See, first of all, I would like to mention that the changes made today cannot be attributed because of political considerations. That is number one. Secondly, the changes made will have a large impact on the businesses of the traders across the country because in its initial draft of the tax structure, there were anomalies and disparities. So, by reducing the rate, those anomalies and disparities have been tried to be resolved. So, I think, and beside the tax rate, it is more of the GST portal which needs to be taken up with all seriousness because the portal has completely failed, and because of this, the traders are facing a lot of problems. So not only the tax rate, even the procedures and the portal needs to be taken up very seriously.
Okay, Najib Shah, I know you have a very strong view on that. A lot has been written and said about compliance. A lot has written and said about the cost of compliance, the number of returns that have to be filed. But what doesn't get talked about with equal passion is the network and the IT processes that are involved, and the fact that the network hasn't really kept pace, taken off, whatever you may call it, but the network has let the GST down. A, do you agree with that premise? And B, where do you believe the solution lies?
Yes, indeed, I do believe that GSTN, had it been functioning in the manner in which it was designed to function, a lot of these issues which are now being raised would not have been there. The GSTN itself is being run by extremely professional people. The company, which is one of the best names in the country, is the technology provider. So I'm sure they'll start addressing and resolving these issues. But to be fair to GSTN, they have been faced with too many changes. And it's unfair for the IT processes to be ready overnight or to expect them to be ready overnight, because every such change in rates, in the procedures, would involve work, it involve testing, would involve a closer examination and discussion with the policymakers before they can be implemented. And that has been really the challenge for GSTN, to be faced with these multiple changes very frequently. So I think GSTN is now more than in the spotlight, and the GOM working closely with the technology provider. So I think these issues will get sorted out, though of course today's large number of changes, both in the rates and the procedures, would mean again a challenge for GSTN. But the staggering of the filing of the returns itself over the next few months should give them some respite. And I hope that they are able to ensure that the return filing process is seamless and painless.
Dr. Rajaraman, comment on that, because what Mr. Shah is indicating, that much of the criticism of GST is largely on account of issues related to the network not being able to take up the pressure of this massive tax reform. But of course, the criticism has been directed at the GST design. The criticism has been directed at the fact that we have multiple rates. Anything but the network which is underpinning the entire reform. What's your own view on that? Because you yourself have been very critical of not just the network, but also the GST design, the entire architecture, far more than you've been of the network underpinning GST, isn't it?
Yes, I believe the most important problem has been with the design of GST, with the reporting modalities. And with the frequent changes in rates. As I mentioned earlier, if you start a new tax with rates which keep changing from month to month, that's not a very good recipe for getting stability, which is what tax reform is all about. Tax reform is supposed to introduce simplification and stability, which is the one thing GST has not delivered on. And even with respect to invoice matching, something which I have felt right from the start we could easily have done away with. Think about it. If you start off with a design which involves very efficient functioning of the IT network, you have to closely interact with the providers of the IT network to ask them if they can deliver on that. So once again, I would put it down to a failure to interact with the IT network sufficiently beforehand to find out their capability to handle this kind of volume of traffic, which was at fault, rather than the IT network itself. I think that has proved to be a bit of a red herring in the whole thing. At the end of the day, it has been design failure right from the start, and I fear it continues to be that, because we are doing piecemeal reform when what we need is a thorough overhaul.
Okay, you're not impressed with the piecemeal reform. Many people believe this is band-aid and quick fixes. Of course, Prateek believes this is a reset. But I'm going to ask you this question, Prateek. What has your experience been with the network? Because, you know, while you're making these piecemeal changes, while you're making changes constantly, and the government believes it's keeping its ears close to the ground and giving into the groundswell on making these changes, the reality is that with every change, the network needs to change as well. So what has your experience been with the network, and how much of the blame for the failure of the GST really lies on the network?
Asking me?
Yeah.
Yeah, so obviously, I think you know, any kind of network like this should have been given much more time to stabilize and to be tested before GST was implemented. And we in India had GST on the go, really. I mean, till the last day we were finalizing the the rules and the regulations, and still as we speak, there are several changes which are happening, and every change that you do today, including the change that let's say has happened today, would have an impact on GSTN. For example, I mean, for restaurants, if you deny the input credit, that has its own set of implications for GSTN, because you have to flag the restaurant guys differently from other businesses. And let's say if I am running a restaurant and I'm also doing some other business, I'll claim credit for one part of the business, and for other part of the business I will not claim credit. So all of these decisions obviously complicate the things. But having said that, I don't want to lose this the overall benefit or structural reform that GST has brought about because of the teething problems. And also you have to recognize the government is cognizant of these changes, and therefore you know, they are making several concessions, several changes. And it is very difficult for any regulator to accept that there is a problem in the system and to take remedial measures. So I think you have to give credit to the council that they are taking the right decisions. And once this initial phase is over, which I think should get over in the next 6 odd months, then you will see a much more stable system than what it is now. So we should not lose sight of the overall GST structure in view of the, you know, a temporary teething problem that we are facing on GSTN.
Okay. Praveen Khandelwal, we have you now back on live as well on video. Now, you know, slightly tricky question, which is on compliance. I mean, you know, one would argue, you would say that these reforms or these steps have been taken not with an iron pulse. I would say, fine, they've been done to appease the trading community, right, which has been up in arms over GST, and let's not sort of argue on that. But why is it, do you believe now with these changes and the series of changes that have been made with GST, compliance will improve? Because, you know, it is sort of inexplicable that with a reform like GST, only 55% of eligible taxpayers have filed the GSTR. And, you know, surely we can't blame the government for this. I mean, you know, yes, complying has not been very easy. It's multiple forms, etc., etc. But nothing explains such a poor rate of compliance as far as GST returns are concerned. Do you believe now that will change at least?
I am unable to hear you.
Can you hear me now, Praveen Khandelwal?
There is a lot of disturbance.
Okay, I think we'll try and fix that audio with Praveen Khandelwal. But my simple question to you, Praveen Khandelwal, is what will improve compliance? Because despite all the steps that the government has taken, only 55% of eligible taxpayers have filed their GST returns. What will it take for traders to start filing their GST returns?
I think it will certainly lead to more and more compliance. And if GST taxation structure is simplified and rationalized in a pragmatic manner, then certainly government is not going to earn any losses.
we will support the government by enlarging the scope of taxpayers, and through which we can compensate the losses by the government. And since for the time being, till 31st of March, Form 3B and GSTR 1 has been allowed to be comply with. GSTR 2 and 3, for that they have formed a committee. So at least some sort of load has been offloaded on the heads of the traders, and I feel it will encourage compliance. It would have been much better if only Form 3B would have been made applicable till 31st of March 2018, because we are passing through a learning process, experimental process, during which various new things will crop up, various new questions will crop up, and we have to get the answers. So Form 3B could be the ideal choice for compliance of returns in GST.
You know, Praveen Khandelwal ji, while I agree that 3B would have been an ideal choice, I have a simple question to ask of you. बहुत लोग GST की बुराई करते हैं, but fact ये है कि बहुत लोगों ने अभी तो GSTR ही नहीं भरा है. 55% of eligible taxpayers have only filed the GSTR. What explains the fact कि लोग फाइल ही नहीं कर रहे हैं और बुराई पहले कर रहे हैं?
See, it is precisely because of the failure of GSTN portal. Why you are sparing GSTN portal? Why the GSTN portal is not rendering satisfactorily services? My trader has to sit couple of hours, and rather more than couple of hours, to even log in to the portal. So you can't put blame on me when your portal is not working.
Najib Shah, come in on that. I think you're best positioned to answer that. I mean, you know, where does the truth lie? Was it the portal so inefficient that people couldn't file returns? Because, you know, this was shocking. I mean, you know, we had the Revenue Secretary join us on the day the compliance data was out, and frankly, he didn't have answers on why, when we asked him a specific question, why did he think, you know, return was so poor? And I sort of, you know, empathize with him. What do you say? Because people evade taxes in this country. You know, or are we going to blame the network and the fact that there are multiple forms and everything else?
No, there have been teething challenges for the GSTN. There's no doubt about it. They were overwhelmed by the sheer number of returns and by our tendency to file our returns on the very last day and last minute. Having said that, I do believe also there has been great reluctance on the part of the taxpayers to get into the net and start filing their returns. So I think the truth lies somewhere in between, really, between the ability or inability of GSTN and the ability and inability of the taxpayer to file his returns. So I think there is a problem, and hopefully these relaxations of today should help ease the process of filing the returns, and GST in itself will definitely overcome its initial challenges.
Okay, I'm going to take this across to Nanalal Kidwai. And Ms. Kidwai, one of the things that has been done also today is that the composition scheme has been raised and is now applied with annual turnover of 1.5 crore rupees. They now have to just pay a flat tax of 1%. So the 3 taxes have been done away with. That 75 lakh first went up to 1 crore. Now that 1 crore has gone up to 1.5 crore. Yet you see, and I'm going to ask this question to many more of you on the panel, you know, the Indian ingenuity, the way Indian businesses suddenly start breaking up into smaller entities so that they could evade the system. Do you believe enough measures have been put in place to ensure that doesn't happen? You know, the related the related companies, that kind of. Do you believe some kind of checks and balances have been put in place to ensure that something like that doesn't happen, even though the composition scheme has gone up, the turnover, the threshold?
Hard to know what those checks and balances might look like. I'm sure that you know, tax auditors, but they will take time getting around, will be looking for all of this. But at the end of the day, it eases the whole way of compliance day one. And if we think that we are going from a system where compliance is very poor to a system which is better, and it's better because So if a guy is splitting it between 3 businesses, but at least he's still paying a tax and he's in the tax net. So then it is, something to begin to figure out whether it should be filed differently or as a consolidated and different business vis-a-vis the 4 different smaller businesses that he's chosen to break it up in. So I think that's the less of a problem. At the end of the day, there is a tax. It's done more with a view to easing the whole process because the whole issue of inputs and all of that gets taken care of. Some would say it's not ideal within the system, but then it's a great way of beginning to ensure that everyone's in the net, even as we begin to later maybe tackle some of these issues. So I don't worry so much about that. I think we know that a lot of small businesses have circumvented taxes completely historically. And this is certainly going to bring the spotlight on them in terms of getting captured somewhere in the system, even as the system gets refined down the line. So I'm all for the change because the ease of filing is clearly one of the reasons why compliance is not happening. I don't think those that are staying out of the system right now, have just said that we don't want to pay. I think there are many out there who want to pay and don't know how. And there's actually a shortage of trained accountants in the country too, people that folks can turn to for support, because accountants themselves are struggling with what rate, where, how to file the returns. They're barely being able to catch up their breath when one lot of filings happens and the second was happening. There's deep concerns in terms of how to comply with dates and what to file. So I think I wouldn't worry my head too much about the fact that Indian ingenuity begins to look at some of these factors. Better to pay something.
Fair enough. I think as journalists, we just tend to be more skeptical maybe. But Pratik Jain, you're the tax expert here, and I'm sure you probably have a better sense of this so-called Indian ingenuity. But, what's your own sense? Is it the fact that compliance has been is that what has held back a lot of people from filing returns, or is there a combination of factors? Yes, compliance hasn't been easy. No one's disputing that. But also the fact that people have been looking for ways and means to escape the system. What's your own sense?
Yes, I think partly all these things that you've said. Revenue Secretary did mention today that 30 to 40% people who have actually filed even 3Bs have filed nil returns. So obviously people who have nil returns, they find it complicated to fill so many sort of things. And therefore now he did mention that there is a 2-step or 3-step process for Form 3B. Which is proposed to be introduced. On a click of a button, you can do that. So some of these things are important as well. Some of them might not really, they might be saying that things are changing so frequently, and what if I don't file it? So I think it's ignorance partly. It's a difficulty in filling up and so many other things. But as we go along now with the simplified 3B. Perhaps the level of compliances will be much more, and till 31st March 2018 you have continued with 3B. Form GSTR1 monthly is only for larger businesses who don't have problem in filing in any case. So yes, there has been a problem, and just one issue to respond, that a higher composition rate, will it lead to more evasion of tax, and whether checks and balances are there or not. And I think that's something which we need to watch out for. But just bear in mind one thing, that the kind of data that the government has now, and they can do very sophisticated data analytics with that kind of data, and therefore evading tax and splitting the businesses into 5, etc., will become increasingly difficult. I mean, it's not impossible, but it'll be much more difficult than what it was earlier because of the electronic data that the government has. So we'll have to watch out for that. Yes, some bit of evasion will continue, And also 90% of your tax is paid by 10% of the taxpayer, and therefore the focus of the government is bigger taxpayer and not the smaller ones.
So Rajaraman, I'm going to throw this political spanner your way. This is perhaps also the first time that we are seeing serious differences within the council and differences along political partisan lines. My question really is, as we move closer to Gujarat, as we move closer to 2019, will we see these differences intensify? This is the first time that 5 Congress state finance ministers wrote to the union minister saying that there needs to be substantial changes made. Their views are not being taken into account. How do you see the politics of GST PAN over the next few weeks, months, if not a year?
You know, what we're seeing is we've been seeing little steps of piecemeal reform. And if you look at what the Revenue Secretary said today after the meeting, in essence, for the remainder of the current financial year, invoice matching has in essence been done away with, because 3B is all that traders will be required to file. That does not go with invoice matching, and already it's been dropped altogether for the restaurant industry. So I think there necessarily has to be more heeding of voices from ground level, which may be voiced through political parties, but also later on perhaps more directly through trader associations and so on. I have no doubt that going forward, we just have to do away with invoice matching if you want to raise compliance levels from the abysmal levels that we're seeing right now.
Okay, let's, Najib Shah, you know, since you were one of the key architects of the GST, you know, in its original form that got implemented earlier this year, what's your own view on the sort of tweaks that we are making and the pace at which these changes are kicking in? I mean, you know, you spoke about it earlier. Is it good, the fact that the government is being so responsive to, you know, concerns raised by various stakeholders, from traders to industry to tax experts, or is it worrying, the fact that there are, you know, that there are so many changes being made and that some of them attack the very core of the foundation on which the GST architecture was built?
Well, hindsight makes us all wiser, and it's great that the government is indeed heeding the voices from the ground. Changes have been made consequently. We were aware as we went forward in the GST process, given the time constraints, that there are going to be challenges. And to that extent, these responsive nature of the GST Council is indeed something which is very, very good. The GST Council itself has had all its decisions taken right through by consensus, which is again a wonderful thing, because across party lines there has been some basic agreements on how the GST should go forward. I think there's general agreement again that GST is too major a tax reform for it to fail. It's now up to the taxpayer to ensure that he responds to the positive changes made by the government and ensure better compliance, leading to better rates of revenue and reduction in the multiple rates consequently.
Okay, Ms. Nailal Al-Kidwai, while you know we're all looking forward to a more perfect GST, how much more time do you believe it's going to give us before we get to a GST that will make doing business in India easy, which will be easy for businesses to comply with? It will really be a good and a simple tax.
Hard to predict how much time, but it's clearly the way we started was such a complex structure because of all the compromising that was happening at the council level and the interstate politics and centers politics with the, you know, in terms of also how money was going to transfer between the two, that what we did get was a very complex, messy GST. But many of us were really glad, I certainly belong to the camp, that we did indeed get a GST that came through. So at least to acknowledge we had one, but there were problems envisaged day one from the time it was implemented. Better senses prevailed, and I'm really glad to see acted on at this stage. It's still complex. There are clearly anomalies. And we will see, again, through the budget, there will be demands for change therein. We will need to look at where tax equivalence was intended, but unintentionally rates may actually look less competitive or in sectors that we would like to assist. So those changes, as in any budget, must also begin to come through. And so there'll be another round of tweaking. And exactly as been pointed out in the panel, with each tweak, there's a level of complexity that comes into the implementation, even while it begins to clean up the system. So it's going to be a number of steps as we move along. I fear muddied by the politics, because it would have been great if it were just trade and business and economics and the reality on the ground that did the cleaning up. But politics makes it messier and a lot of noise around that. But we are getting there. I think we're still a couple of years away from when we have a smooth system which everybody understands and which is clean and clear, and a rate structure which is needs to be narrowed down further.
Sure. Okay, Praveen Khandelwal, quick word from you then on how the trading community is now going to react to GST, given the tweaks have been made, given the fact that compliance issues have been seriously looked at, and now even the Revenue Secretary has indicated that he's going to look at every form as far as GST is concerned and see how can that be further simplified as well. So the intent is very much there to make it easier for traders to come on board. Do you expect now compliance to really shoot up as we move forward?
Sorry, question is not clear to me.
I was asking, now that all these changes have been made, are you optimistic that compliance will go up significantly?
Sorry, I can't understand what your question is.
Okay.
There is a lot of disturbance here.
Okay, my apologies for that, Pratik Jain. I'm going to let you have the last word then, which is something that the Finance Minister said, really, which is on the fact that real estate is something that's up for consideration. It was slated in the meeting today, but they didn't have the time to discuss it. It's going to come up next. Are you hopeful that that will get taken up and the correct decision will be taken? And then, of course, the big one, petroleum, is something that the government and the council probably needs to move on. Are those two things that you're going to watch out for? What else will you keep an eye out for?
Yes, so on real estate, I think we are much closer of real estate getting included in the GST, simply because central government supports it and many states also support this. And also, you know, if it is not included, it still promote the cash component in the real estate sector. And once you include that, that would mean that whatever construction, etc. I do and whatever building I purchase, whatever GST I pay, I claim an offset as a business. So that's very important for it to come, and I think the debate has already started. The other advantage there is that you don't need to tweak the constitution. You don't need to do much about this. You know, just need to make some legislative changes, and it can be included. On the petroleum products, I think it is going to take more time because of the fact that the revenue collections have to stabilize. The states have to get that confidence, and also there is a fear that once a petrol etc. is covered, then there could be misuse of credit. So perhaps there the way to go is to do it gradually. First maybe bring in ATF and natural gas and then look at bringing others. But that I think is a slightly longer term horizon to my mind. But real estate, I think the debate has already started. I'll not be surprised if within the next 1.5 years you will see real estate getting included under GST.
All right, fair point indeed. But on that note, completely out of time on this edition of the India Development Debate. It's the GST Reboot. Is this really going to change the complexity with which the GST was launched? Would it be easier for people to embrace the GST is now really the big question and perhaps the big focus area of the government as well. But thank you very, very much, Mr. Najib Shah, Dr. Indira Rajaraman, Pratik Jain, Mr. Khandelwal and Naina Lalkidwai for joining us right here on the show this evening.
Don't go anywhere. Up next is Top 10 at 10. Keep it with ET Now. Good night.